on just common questions on real estate investing and the global stock market. Now, unfortunately, I've been very busy today. I forgot to actually promote or to give the word that I'll be doing a live stream today. But just for the benefit of Joel Dallas asked yesterday, how do you do or how do you do cost averaging in the US stock market? So that's what I will be talking about today. Okay. Now let me just see if I can adjust this. All right. So cost averaging in the US stock market. So cost averaging is simply the idea behind cost averaging is investing a specific amount of money regularly every month. So you do cost averaging either for specific stocks, groups of stocks, and we will discuss all of that later. But the idea here is really to be continuously investing a specific amount in the stock market regularly. So you can actually in the Philippine stock market, the US stock market, or in any stock market. So of course, if it's in the Philippine market, it's peso cost averaging. But if it's in the US market, then it's dollar cost averaging. So for us, if you invest in the US market, we will have to, naturally, we will convert our pesos into dollars because all of the stocks there are in dollars. Okay, so let's look at some of the common mistakes that people make when cost averaging. So one of the common mistakes is listening to short-term noise. So the US market is very noisy. There are a lot of stocks there. There are a lot of companies there. So a lot of things that happen in the US market. Like recently, or last, I don't know if it was this month or last month, where you have Street Bets, a Reddit forum that pumped up certain stocks like GameStop, AMC, and I think there are 2 or 3 more that they lifted up in price. But they're not necessarily great long-term positions. So if this is just short-term noise, it's not a good idea to do cost averaging on stocks like this. So the idea here is really to invest long term. Cost averaging is a long term strategy. So you have to identify companies that are great to invest in over the long term, not short term. So you need to avoid short term ones. Mistake number 2 is investing long term but blindly. Right? That's actually what happened to me when I invested in the Philippine market. Right? Thought that okay, if you invest in specific companies, these are big companies. How can you go wrong when you invest in companies that are already been big in the Philippine market? But unfortunately, right, the Philippine market, since I guess from 5 years, as long as 5 years ago, has been going down steadily. So it's been struggling to go up. Now, will it be the same long term? I don't know. So, of course, I'm still hopeful that over the long term, the Philippine economy will recover. Right? But there are just too many things that we can't control. So it's just important that don't invest blindly. Okay, try to do your own due diligence. Right? Investigate. A lot of people in the past they invested blindly in, say, in uh, VULs or pre-need plans. And I was also a victim of that without really understanding what the purpose for these vehicles, what are the specific purpose for these instruments. So I'm not saying that pre-need plans are bad. I'm not saying that VULs are bad. They have a specific purpose. So you need to be aware of whatever it is that you're investing in. Is it the proper vehicle, right, for your long-term goals? So indeed, it's not enough to just think invest long-term, but you're not investing in the right vehicles. Okay, so do your own due diligence to avoid that mistake. And mistake number three is just not investing in the US or global market because you think it's probably difficult. There are too many stocks there. Well, how do you choose which are the best stocks to invest in? Uh, I don't know enough about this market. So there are a lot of excuses why people don't invest in the US market. But we'll try to simplify it for that purpose of cost averaging. You just identify a few instruments or a few stocks that you invest in regularly. And then you just ignore everything else. Okay. And so this is a chart of the comparison of the US market and the PSE. So the PSE is the one here below this green, this blue line stuck here at the bottom. This is the US and the markets. I think this was taken 2 weeks ago. So this has definitely changed in the past 2 weeks. The US market has had extra activity. It has gone up and down recently. So I will need to update this chart. But the general idea here is it's still a lot. If you look at it from a 5-year perspective, and the US market is still a long way from the PSE. Okay. So the easiest way to get into the US market is through cost averaging. So you just buy regularly. The question here is, what do you buy? Saan ka ngayon papasok? What are the things that you can? What are your options for buying into the US market? Well, number one, you can buy the big tech companies. Right? The big tech companies over the long term have shown that they are, at least the big tech companies that we have right now, have shown that they can adapt. They can adapt to the changing environment. They are continuously innovating, and they're still continuously growing. So, is probably the safest bet that you can make are buying into these big tech companies. Of course, you still need to do your own due diligence because you never know when things may change. Okay, the market is always changing. So if a situation changes for a big tech company, then you need to be aware of that. Then you need to evaluate if you want to get out or not already. Right? And a lot of these big tech companies are familiar to you and me. Well, I don't know if you cannot identify a company uh, among these six, right? So there's Amazon, Google, Microsoft, Facebook, Tesla, and Apple. And out of these six, probably the only company that is still not established is Tesla. Okay, so Tesla probably is probably not yet a big tech company, but definitely it has grown to be a leader in the automotive sector. So, but then don't just take my word for it. It's important that you do your own due diligence uh, around these companies. So actually, I did a deep dive on Google. I did a deep dive on Alphabet. Let me see if I can share that. Okay, so I did a deep dive on Alphabet I think this was a few weeks ago, probably February. So you can check out my YouTube channel, the Dealer channel. So it's in Facebook. So you have to go to YouTube, youtube.com/dealmaker, and look for my Alphabet stock analysis. So I actually did a deep dive on Alphabet to see if Alphabet is a good investment. So I will not go through this entire slide in here. Gave there 5 reasons to avoid Alphabet and 8 reasons where you may want to buy Alphabet. So it's always good to do your own due diligence before buying so that you don't invest blind. So it's not good that, oh, that's a popular company, maybe I should invest in that, right? So especially right now during the pandemic, there are a lot of popular companies that are struggling. A lot of the brick and mortar companies, the non-digital companies, they are struggling to get their companies back on track. So it's very important to do your own due diligence. Okay? So you definitely you can buy big tech companies, but do your own due diligence. Next, you can also buy strong growth companies, companies that probably are not as familiar to us Filipinos. That's why it's important that we investigate. Some of these companies you may be aware of, but some of them probably not. Right? So Shopify, probably if you are, if you're in e-commerce, you're probably aware of Shopify. The great thing about Shopify, we have 1 million businesses that have subscribed to their service, and Shopify earns on a recurring basis. I also did a deep dive of Shopify stock. So any stock that I mentioned here, you should do your due diligence first, because I have not done due diligence on every one. And even, for example, for Shopify, I found Shopify to be a bit too expensive for me. So personally, it's expensive for me right now. I'm still waiting for time to enter into Shopify. Yeah, I missed the boat. So there are situations like that, and you miss the chance not to buy into Shopify. For for me, I do believe Shopify is still a strong growth company. I'm just waiting for a good time to get into that. And the good thing in the US, there are a lot of amazing growth companies in the US. So there's also Square, which I think is also quite expensive right now. Not as expensive as Square is Etsy. Okay, so Etsy, probably Etsy, it's also a marketplace. It's also in e-commerce. Maybe you have bought something from Etsy. So and Etsy has shown consistent growth in the past few years, past few quarters. They're very amazing in the way they run their companies. Same with Square. Square is actually a fintech company. It's like a combination of PayPal and Shopify. So that's the great thing with Square. They're actually competing, right? So Shopify is competing with Square now. They're introducing Shopify Pay. So they're also getting into fintech. What else? Probably a company that's not familiar to you is CrowdStrike over here. CrowdStrike is a cybersecurity company. It's one of the leading companies in cybersecurity. We're not familiar with it because I think we're more familiar with the smaller ones, the smaller companies like McAfee. What else? Well, that's the antivirus that I use, because when we think of cybersecurity, we think of antivirus companies, but cybersecurity is more than that, especially in today's world. And CrowdStrike has has as their clients 90% of the Fortune 100 companies. So if the biggest companies in the world get CrowdStrike, then maybe they're doing something right. And so I believe that over the long term, this is going to be a great company to buy into. Right now, it's a bit expensive, but no, you just have to ride. You just have to ride. Okay. Another company here that you may be familiar with is Activision, Blizzard Activision, especially if you play Warcraft or Dota. That's their, those are their products. I'm not familiar with the other games that they have, but this is a gaming company, and gaming companies have been growing, just been growing, in the past few years. And gaming has actually overtaken watching TV as the preferred, as the preferred mode of entertainment of young people. So less and less people are watching TV, more of them are playing games. And as more people play games, gaming companies like Activision will benefit from that trend. A company that you are probably not aware of, especially if you're not familiar with the US market, is Enphase. So Enphase in a way, it's like a competitor to Tesla. You know, they're also a solar company, a storage company, they're a company. So they're competing with Tesla's battery storage business. So, but Enphase has grown um, exponentially also in the last few years. So this is a very strong growth company. These companies, again, uh, these are not recommendations to buy. They're just pointing out companies that have grown very, very well in the past few years, past few quarters. Still, it's important that you do your own due diligence. But if you want to look at, the companies that I have analyzed, feel free to check it out on the Dealmaker channel, youtube.com/Dealmaker. Right now, if you don't want to mess around, or buy specific stocks, you can buy index funds. So there are a lot of index funds to choose from, but the main indices that you can follow are the SPY, right? That's the S&P 500. So we have here. There are actually a lot of companies that offer index funds. So like SPDR or Spider, that's one of the companies that offer the SPY index fund. Power Shares by Invesco. Invesco is another company, or another mutual fund company that offers the QQQ ETF. Okay, so this is based on the Nasdaq. And Vanguard also has the Total Market Index, or VTI. Now, Vanguard also has their own S&P 500 index. They also have their own index. So there's really a lot of choices in the US market, a lot of index funds to choose from. And I'm just showing you the slide again, just to show you the vast difference in performance between the Nasdaq, the S&P 500, and the Philippine Stock Exchange, or the Philippine Index. All right, so I hope that you are liking. If you're watching from the replay, we still have 3 more items, three more options for cost averaging. But I hope that you smash the like button in Facebook or in YouTube. That helps these companies share this video to other people. If you want to go beyond the indices, so buy actively managed ETFs. So there's one particular actively managed ETF that has done really, really well. And the thing is, in indexes, or 80% of professional managers actually lose money. They don't perform as well as the index funds. So it makes sense for most people to just buy index funds. Okay? But if you're a little bit more adventurous and you're willing to investigate the 20% that consistently beat the index funds, then look out for those overperformance and buy their ETFs. So one such company is ARK. So as you can see here, ARK now has vastly overperformed even the Nasdaq. But kanina, the Nasdaq was already among the three. Among the 3 indices, Nasdaq, SPY, and BSE, Nasdaq was the outperformer. But the ARK Innovation Fund, has outperformed the Nasdaq in the past 5 years. So ARK has actually five ETFs under their name. So I'm just showing you 3 here. So there's ARK-K, that's their main. That's what they call the Innovation Fund. So that's their main or flagship ETF. ARK-Q focuses on autonomous driving and robotics. That's where Tesla comes in, and all of these companies that are involved in the robotics and autonomous vehicle revolution. Then there is ARK-F, or is the fintech revolution. So if you remember earlier, like we mentioned, Square of the fintech revolution. Square is in the portfolio of ARK-F. Then there's 2 more. There's ARK-W for next generation internet, and ARK-G for genomics. So all of these platforms of innovation are being or have managed funds, under ARC. There are definitely other ETFs out there, so it's not just ARC. But again, do your own due diligence. So there is the China technology. If you believe that China is going to outperform the US over the next few years, you may want to buy these Chinese funds, right? CQQQ and PWEB. So they are China-focused ETFs. Then iShares also has an index fund for the emerging markets, the NCI Core Emerging Markets. And then you just look for the IEMG, which is the Emerging Funds ETF for iShares. You can also buy dividend stocks. So there are stocks in the US that issue dividends. A lot of the growth stocks, they don't issue dividends. So an exception would be Apple. Apple issues dividends, but most other growth stocks, they don't issue dividends. Why buy dividend stocks? Well, there are companies in the US that have given regular dividends for the past 25 years, for the past 50 years. So you can expect a steady stream of cash flow. But you don't need to wait for the price of the stock to go up, because you will earn money from them through dividends. You will get passive income through dividends. So there are REITs in the US. There are a lot of REITs in the US. We own REITs now. Right? We have the Ayala REIT, we have the Double Dragon REIT. But the US has more. There are more options to choose from. So some of the dividend stocks that you can choose from may be familiar to you, like 3M. But 3M is very, very popular. 3M has a lot of products here in the Philippines. P&G is also very popular here in the Philippines. So you have the opportunity to buy into these global companies that issue dividends. So you will get dividends in dollars. It's good to mix it, right? You have Philippine companies that issue peso dividends, and it's also a good idea to have US companies so that you'll get dollar dividends as well. Then over here, this is probably a company that you're not familiar with, but this is AbbVie, ABBVIE. Right? AbbVie was spun off from Abbott Laboratories. So Abbott Laboratories, research and research arm of their pharmaceutical research arm was spun off to AbbVie, and it became its own company. And AbbVie is also a company that issues dividends, and they have been increasing. That's the nice thing with these companies. These are called Dividend Aristocrats, and these companies have issued dividends consistently. They have not missed the dividend payment in the past 25 years, and they issue increasing dividends year on year. Okay, so every year they're also increasing the dividend payment. And so there are companies like that in the US market. Okay, so so far, are there any questions before I move to the last item? So I'm just wondering if you guys have any questions. Okay, I think I have the wrong title. I have the wrong title. I'm saying real estate investing. Okay, so if there is, so I'm still experimenting with Restream. I was not able to schedule this session. I do plan to go live every day, well, every weekday, Monday to Friday, at 6 p.m. Talk about state, talk about global stock market, talk about side hustles, and all about growing money, business, real estate, and the stock market. Okay, but I'm still learning this platform, Restream. Okay, so where was I? All right, dividend stocks. The final. So we've covered 5 already, right? 5 options to do cost averaging in the US market, right? Number 1 is to buy the big tech companies, right? Big companies like Apple, Facebook, Google. Right? So these are quite possibly the safest options over the long term. Right? But of course, don't just take my word for it. Do your own due diligence. Okay. So big tech, you can also cost average on the emerging growth companies. Companies like Shopify, Square, they're not yet as big as the big tech companies that we have right now, but they're getting there. And so it's a good idea to also buy the next big tech companies. So number three was to buy the index funds. But if you don't have the time to do your due diligence on individual companies, then you can go ahead and buy the index, buy the entire market, buy the entire US market. So I gave you options on what index funds that you can buy. Okay. Number four, if you're more adventurous and you know of any good uh, fund managers, then buy the ETFs of those fund managers. So one example is ARK Invest. So ARK Invest's 5 ETFs has outperformed the US index funds in the last 5 years. So you can do cost averaging for ARK Invest funds and other ETFs that you may come across. Like if you want to invest in China ETFs, then there are China ETFs as well. And then the fifth one that we talked about are dividend stocks. So there are US companies that are members that are called Dividend Aristocrats. These are companies that have steadily given dividends in the past 25 years. They have never missed a dividend payment, and they have been increasing their dividend payments every year. So if you're about to retire and you want to earn dollar passive income, then definitely you can buy these dividend stocks. Okay? And then lastly, you can also, before we go to the last one, just a reminder, if you want to get those videos, while I don't know if I'll be doing stock analysis live during the 6 p.m. sessions. Normally, I record those stock analysis videos because they are for global consumption. So they're not live streams, they're recorded. Make sure to subscribe to the Dealmaker channel so that you can get a hold of these stock analysis videos. Like the one I showed you earlier, Alphabet. I did an analysis of Alphabet, I did an analysis of Shopify, Qualcomm, Facebook. So I've done a lot of stock analysis videos already, and I will be doing more in the future. Okay, so make sure to go to YouTube. If you're watching this on Facebook, go to YouTube, youtube.com/Dealmaker to subscribe to the Dealmaker channel. And again, do your own due diligence because the last method to do cost averaging is also through copy. So there are already platforms that actually allow you to copy very, very good traders. There are traders that are not fund managers, but they do as well, if not better, than some of these fund managers. So there are already platforms that allow copy trading. And if you want to learn more about that, copy trading, then let me know. You can send me a private message or you can comment below so that I can show you how to do copy trading the proper way. All right. So with that, are there any questions? Let me know in the comments if you have any questions, or if you let me know if you have any questions that you want answered in the future. Okay. And then if there are, you can also comment in YouTube, right? If you are watching YouTube, you can comment on the chat or comment in the comment section if you're watching on the replay. Right? So if there are any more questions, I hope this helps you, build your US portfolio, build your US stock market portfolio, and always remember it's a great day to make deals, and I hope that all of your deals will push through. See you in our next video.